Hello, 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 and welcome back to the Freedom Ain't Free channel. Today's video, we're going to be discussing the 9 risks to your financial future, the things that are attacking your money each and every day that you need to have a plan for. This is step number 5 in our 7-step process to get you financially free. And we just wanted to take this opportunity to get you ready to go as we dig into these 9 steps to your financial freedom. Make sure you stay to the end because I'm going to give you a book link and some information that you want to take advantage of in order to pull all of these pieces of the puzzle together. If this is your first time on the Freedom Ain't Free channel, we want to welcome you today. The purpose of this channel, or the purpose of these videos, is to give you the wisdom, the knowledge, and the understanding of all the financial tools that are available to you so you could get financially free. Financially free to pursue the things in life that you want to do. Financially free to pursue the things you're passionate about. Financially free to be able to spend time with your family and work in your ministry, or to accomplish the things that your God has called you to do. That's what this channel's knowledge, wisdom, and understanding is designed to give you. My name is Joel Huey. I'm the principal at ARC Financial Strategies, where we work with Henrys. We like to refer to them as high earners, not rich yet. And our objective at ARC is to help our Henrys to develop a $2 million portfolio that they can turn into $120,000 to $160,000 a year worth of income for themselves, so they can break free from the rat race, be able to pursue the things that they are passionate about, and that they would be financially free. So we're going to jump into these 9 pieces of the puzzle, these 9 risks that are currently attacking your financial freedom each and every day, and then some strategies that you can put in place to protect yourself against these risks and make sure that they don't overtake you. And then lastly, I'm going to give you a book to read. It's going to pull and tie all of these pieces of the puzzle together, and we are going to put that link in today's video. So let's jump into the 9 risks. I'm going to give you all 9 of them up front, and then we're going to talk about each one of them individually. So the first risk you got to protect yourself against is taxes, and most importantly, current tax rates and future tax rates. The next thing you got to protect yourself against is market loss. The third thing you got to protect yourself against is inflation. Fourth thing you got to protect yourself against are unexpected emergencies. Fifth thing is outliving your money. Number 6 is lawsuits. Number 7 is fraud. Number 8 is death. And number 9 is disability, right? So those are your 9 steps. Gave them to you right up front, 9 risks. Now let's talk about each one specifically and a strategy to overcome each piece of the puzzle. So number 1 is taxes. So most of our clients at ARC, we find, are currently mostly investing in what we refer to as the tax bucket of tax deferred investing, right? So that's where you had a dollar, you didn't pay tax on it, you invested it today, you made a profit, and at some point in the future, you're going to have to pay taxes on both dollars. Well, the issue with that, or the struggle with that, is we have no idea what tax rates are going to be in the future. So we recommend to our clients to move a portion of their portfolio over into the tax-free bucket. If you want to know about all 3 of the tax buckets that I'm talking about, check out the rest of our channel. Make sure you subscribe, and you can go through the 3 buckets of investing there. But a recommendation on how you can overcome or diminish the potential risk of future taxes is by using tax-free investment strategies. There are basically 4 different strategies you can use in America. Number 1, you can use a Roth IRA. Number 2, you can use a 529 plan. Number 3, you can use municipal bonds. Or number 4, you can use cash value that builds up in a life insurance policy strategy. Those are the 4 tools that you can use to help you overcome the potential risk of higher taxes in the future. Number 2 is market loss, right? We all understand how the stock market works, but nobody does it that way. You're supposed to do what? Buy low and then do what? Sell high, right? So that means when the market is up, we should be selling. When the market is down, we should be losing. Challenge is that most of us are emotional investors. What does that mean? That means by the time we get our investment information, the market has already shifted. We feel like we're behind the 8 ball, so we sell to cut our losses. A couple of ways that you can manage the risk of market loss is by using some different tools. The number 1 tool that you can use to manage market loss is an indexed annuity strategy or a IUL strategy, which is an index universal life policy. Either of those two strategies will allow you to invest money in the strategy. You cannot lose money. There's no capital loss in that strategy, but you have an opportunity for upside gains when the market goes up. The insurance company will give you a participation rate. They'll allow you to participate in the growth or in the gains. So there's only upside opportunity, no downside opportunity. You could also use fixed products, right? So there's CDs, savings accounts, fixed annuity strategies that are in place, money market accounts that are in place that would allow you to have some market exposure on the upside with no market loss downside. So those are some strategies that you can utilize to protect yourself against market losses. Number 3 is inflation, and I like to refer to it as price gouging. The same chicken that was laying eggs 3 years ago is the chicken that's laying eggs today, but eggs cost more. So you got to understand that prices are going to go up in the future, and the best way to hedge yourself against that is by making sure that your investment strategies are outpacing the inflation rate. Currently this year, inflation is running right around 2.7% on most of the goods and services that we buy on a regular basis. So if my portfolio is performing at 4, 5, 6, 8, 10%, then I'm outpacing inflation. My money is growing at a rate faster than inflation. And so the bulk of the money that you're planning on using later on needs to grow at rates double that of inflation in order for you to protect yourself against price gouging or inflation. Number 3 is emergencies, right? Emergencies are things that happen that you didn't plan to happen, that you don't want to happen, right? That is how I define an emergency. So the average American, if they have an emergency above $400, is going to have to use debt in order to manage and make it through that emergency situation. We want to get you out of that cycle because at our financial strategies, we help our clients get out of debt and build wealth. Debt is the biggest killer of building wealth in our country, and you want to get rid of all of your personal debt. But the way you protect yourself against an emergency situation is by having an emergency account, right? So that is a place where I'm storing money, place that I can get to easily, grab cash easily. That cash is not needing to grow at a rate much above inflation because its goal is to be there on the day that I need it. So I need to make sure that it's in a space where there's little to no risk at all. So recommendations in that space. You can use, again, fixed annuity products, offer you a guaranteed rate of return. You can use a CD, offers you a guaranteed rate of return. Money market accounts, great place to put this type of emergency money. You can also use a whole life insurance policy. The advantage behind the whole life insurance policy is the insurance company is going to give you a guaranteed rate of return. You can borrow the cash value outside of the policy for whatever you want, pay yourself back whenever you want, or never pay yourself back if you don't want to. So those are tools that you can use to help minimize the risk of having an emergency and not using debt as a strategy to make it through emergencies. Next is outliving your money, right? Statistically, we know that Americans overall, we're starting to live longer. And the challenge with living longer is we also need our money to live longer. So how do I make sure that I don't outlive my money? What does outliving my money mean? That means that I had a certain amount of money saved up for my non-working years, and I am starting to dwindle that rate at a faster rate than I am producing new dollars. That's outliving your money. Some strategies to help you with that piece of the puzzle. Number 1 is you can get what is referred to as an income annuity. An income annuity works very similar to Social Security in how it's paid out, not in how it's accumulated, but in how it's paid out. But an income annuity will give you a guaranteed paycheck every single solitary month for as long as you're living. You cannot outlive that check. So in that case, when you're setting up your long-term strategies, you want to make sure that you have a guaranteed source of income for your basic necessities, right? So my mortgage, the light bill, the water bill, the phone bill, the cable bill, my insurances, those expenses that are probably not going anywhere for a very long time. We want to make sure that we have a guaranteed check that's going to come in to take care of those for the rest of our lives. So an income annuity is a great strategy to make sure that you don't outlive your money. The next one is lawsuit, right? And that's where you got sued by somebody who's coming after your assets, right? So a couple of great strategies there. Number one is get you an attorney on retainer. There are a lot of good services out there that you could use in that space, somebody to help you in that situation that you could talk to. Number two, in protecting yourself, is to move your assets out of your personal name. So that way you can move your assets to a trust. You no longer have any assets in your name, therefore there's not much value in suing you. Those are some strategies. Reach out to an attorney. They can give you some more specific strategies around protecting yourself against the risk of lawsuit. The next one is fraud, right? People stealing your money, right? So, like illegally stealing your money. There's lots of people stealing your money legally. If you want to go back and watch, I did a whole video on what happened to my 401k. How did I lose 25% of my money overnight? Did a whole video on that. You want to go and check that one out. But let's talk a little bit about people illegally stealing your money. One of the things that you could do in that case is you can use a spending control strategy with a company like Cube Money. We recommend. Cube Money is going to give you multiple debit card numbers that you can use while you're out in the marketplace buying goods and services. This protects your actual debit card number from being out and available for people to steal. Also, you want to make sure that you have the fraud protections at the highest level that you can have them with both your debit cards and your credit cards. And then lastly, and most importantly, review your statements on a monthly basis and make sure that whatever charges were on your account actually were charges that you authorized. That is the best way to protect yourself from fraud, is to stay on top of those transactions. The next risk that you got to protect yourself against that's coming after your financial freedom is death. If you die prematurely and we're not in a position where we have to put together that $2 million portfolio for our family to continue to enjoy the lifestyle that we've created yet, we have to protect ourselves against death. The best strategy for protecting yourself against death financially is a life insurance policy. It is the best tool. Whether you want to have a term insurance policy, a whole life policy, an index universal life policy, or a variable universal life policy, totally depends on what additional features you want out of your life insurance policy. But all four of those policy types pay a death benefit. And we want to make sure that we leave our families enough money to be able to maintain the lifestyle and continue to save and grow and invest for the next generation. So I tell all of my clients you're worth at least $1 million, $3 million, or $5 million, depending on what your net worth is today. And we want to make sure that you have the right amount of coverage to take care of that situation in the event that you die before we're able to put your $2 million portfolio together. Whether you want to get your insurance through your employer, or my recommendation is for you to own your own insurance policy, because you never know. You might be in between employers when you die, and then your family has no coverage. So you want to make sure you have coverage of your own, but also take full advantage of the programs that your job has available to you. They're usually group plans, so they're going to be a little bit less expensive in the short run, a little bit more expensive in the long run. That's why you want to have a good balance between what you have at work and what you pay for yourself. The last risk that I want to cover today before I go into the book that I want to encourage you all to pick up, the last risk I want to talk about is disability. And disability is my inability to earn income at the level that I'm currently earning income at because of health reasons. A lot of times people think of disability from the perspective of I was in an accident or something along those lines, but most people become disabled due to disease, right? So let's just be honest with ourselves, is that we're not truly taking care of our health to the extent that we should. Therefore, we're putting ourselves in a position for our bodies to fail us prior to putting together our freedom portfolio of $2 million. If that is the case and we lose our ability to earn income, we also lose our ability to save and invest money. We need to protect ourselves against that risk. The best way to do that is with a disability insurance policy. You can get a disability insurance policy. Usually, most people start with the one through their employer. I recommend that you have one on your own. Your employer's plan will cover 60% of your income. You could get a personal plan that you own of your own that will cover the additional percentages that you're not getting through your employer anymore. This is a check that will come in every single solitary month, whether you're able to work. Most private disability plans also come with an option of you being able to work partially. So I might can't work full time, but I can work part time, so I can still get the check and then continue to earn additional income outside of that. That's a very important feature to add to your disability policy, because it might not be that you can't work at all. It might just be that you can't do the job the way you used to. So I'm not getting back to the income that I was used to getting, and I need some supplement in the space until Social Security kicks in at age 62. So you want to make sure that you have that piece of the puzzle covered, and you want to make sure you're protected. Those are the 9 risks to your financial freedom. You need to have a plan in place for each and every one of them to make sure that none of these things derail you from getting the financial freedom. And once again, we define financial freedom here at the Freedom Ain't Free channel with $2 million in investable assets, spitting off $120,000 to $160,000 a year in income for you, coming in from your assets, not from your labor. America wants you working forever. They want you to show up at work every day for the rest of your life. Here at the Freedom Ain't Free channel, we want to give you the wisdom, the knowledge, and the understanding to break free from the rat race, put yourself in a position where you can pursue the things that you want to pursue in life. Maybe you want to start your own business. Maybe you want to spend more time with your family. Maybe you want to spend more time in your faith. Maybe you want to spend time at the schools pouring into the next generation, right? If we can break you free from debt, if we can break you free from financial struggle, if we can break you free from having to go and do that work that you don't want to do anymore, then we've accomplished our task here at the Freedom Ain't Free channel. Feel free to reach out to us at ARC Financial Strategies if you want to get your freedom number, which is the exact number that you need to save on a monthly basis for you to get financially free. My name is Joel Huey, principal at ARC Financial Strategies. Thank you so much for joining us today. And here is your prize for staying all the way to the end of this video. The book I want to recommend is called Tax-Free Retirement by Patrick Kelly. The link is in the strategy below. I recommend that you get the hard copy of the book. It's got a few more pieces of the puzzle in it that you will be able to use in order to help yourself take care of and prevent these risks from overtaking you. Once again, that's the Tax-Free Retirement, Patrick Kelly. They're going to put the link in the book, the link in the video. Go ahead on and click on the link, buy the book. I recommend it to you as you strategize on through. And remember, freedom ain't free.